Today, I'll explain why we expect a crash in the Nasdaq soon. I'll cover the news and events that could trigger it. Then, I'll share Ray Dalio's opinion on the biggest tech stocks and his assessment. Finally, we'll look at our price targets. Let's begin. Welcome to this new video. First, I'd like to explain how we analyze most indices and what we consider. We start by looking at the biggest companies in an index. If the index contains fewer than 50 companies, we analyze the entire index for a better assessment. Since the Nasdaq contains 100 stocks, I can't go into detail about each one, but since we analyze more than half of the Nasdaq stocks, we can justify it internally. However, I want to briefly introduce the most important stocks. These stocks are also known as the Magnificent Seven. Microsoft, Apple, Nvidia, Amazon, Alphabet, Meta, Tesla, Broadcom briefly overtook Tesla. But I don't see that as a big problem because I view Tesla as slightly weakened, and we expect stronger growth in the coming months. Now to my critique. When we look at the market cap, 6 companies have a higher market capitalization than $1 trillion. After Meta, the value halves to $600 billion. And then, adding Tesla, it halves again to about $300 billion. Then the index starts to form no such huge market capitalization. For example, Nvidia has had a strong run this year. If there's a 20% correction, which we expect, it will have a worse impact than if, for example, 5 companies worth $200 billion each were corrected by 20%. This could be a problem. Let's look at how much inflow the Nasdaq actually had. The Nasdaq gained $1.6 trillion in market capitalization since 2024. That's a lot, but as we can see in the statistics, it's not very sustainable. About $1.5 trillion were received by just 4 companies: Nvidia, Meta, Microsoft, and Amazon. The rest received only $75 billion. Since Nvidia, Meta, Microsoft, or even Amazon could perform very well, we could see outflows from these companies, where the money could be invested in other markets or a few other companies to realize more profit. That's my first point of critique. Now, let's look at an interesting statistic. This statistic shows the market capitalization of the G20 countries at their stock exchanges. First is the USA at the top with a market capitalization of $50 trillion. Then, not China, Japan, or another country, but the 7 biggest US stocks. These are the Magnificent Seven I mentioned. These 7 companies have a higher market capitalization than, for example, China. We see China as very undervalued, and we could see a very strong inflow into the stocks and the index. I will discuss this in another video. But now, back to the statistic. For example, if we look at individual titles like Apple or Microsoft, they have more market capitalization than, for example, the UK, and almost as much market capitalization as France, for example. And that's very interesting. We could therefore notice outflows during tense times. Now I want to show an interesting chart. It shows the growth of S&P 500, Nasdaq, and Stock 600 compared to the Magnificent Seven since 2015. S&P 500 has increased by 140% since 2015, as we can see from the blue color. And then the Nasdaq had a growth of about 230% since 2015. The light blue chart shows the growth of the Nasdaq, but the main driver of both indices was mainly due to the Magnificent Seven. So, if you had only invested in these 7 stocks, you would have achieved an increase of about 1,700%. You would have outperformed the market, and you wouldn't have had as much risk. As we can see here, the 7 stocks have also been very volatile. They have risen sharply when everything generally rose. But there was also a strong correction where they had halved. Even if they had a stronger correction, they did not undercut the indices with about 600% growth. The corrections in individual stocks can be stronger than in the indices. But when they rise, they outperform the indices if you bet on the right stocks, which are also safe, like the Magnificent Seven. The Magnificent Seven are no secret that has just been heard. They have been so for years. The Magnificent Seven are in S&P 500 and Nasdaq. They are one of the main drivers of the US indices, especially the Nasdaq. Then we look at what Ray Dalio, the founder of the hedge fund Bridgewater Associates, has to say. Ray Dalio published a market assessment on the enormous rise in the stock markets, saying that we have risen sharply but are not yet in a bubble. He says that Alphabet and Meta are cheaply valued. I agree with him 100%, but we expect a correction in these stocks soon. But he finds, for example, that Tesla would be a bit overvalued. We don't quite agree, even if it can't be seen in the numbers. He also says that the market capitalization of the Magnificent Seven has risen proportionally to their profit and revenue. That's true, but it doesn't mean that we will continue to rise without corrections. And that's why we also expect a correction. Now let's look at my price targets. There are two scenarios, a likely and an alternative one. The first, which I can most likely go along with, is that we will climb a bit further, up to 19,000 to 19,800. Then we could experience a short intermediate correction, where it can fall up to 8%. Then we could see an entry of at least 11% up to 30%. These are points from at least 2,000 to 5,160. Those who trade it as an ETF, of course, have a good chance to make a profit compared with little risk. But those who trade it with CFDs could have a very strong entry per point. But you have to be clear about your risk yourself. This is not investment advice. Then we expect a larger correction phase. The index could correct itself down to 15,000. That would be a profit of about 4,400 per point for short traders. And for ETF people, it would be a stronger outflow of about 23%. Now let's look at the second alternative. The alternative is that we could experience a larger correction between 19,000 and 20,000 without further intermediate correction, where we could also see that we could fall to 15,000. That could be, but I do not assume so. I have defined support lines. If we fall below 16,000, it would already be certain that we are in a stronger correction. But the point at about 17,000, I think, will hold. If not, we could be stuck in the alternative. But some of the analysts have a different opinion, and some wonder when I should trade with CFDs. You could trade at this intermediate correction. I would not enter a take-profit order, because you can't calculate the price targets exactly yet and don't know how likely it is. But it could also give a lot of profit. For CFD traders, it would be about a profit of 1,700 points per point. That would be very good. But of course, this is not investment advice. For ETF people who do not want to trade with so much risk, could use this intermediate correction to buy more. Of course, the ETF psychology is that you hold it for 10 years. But people who want to trade a bit more actively, and then still not with so much risk, could do it with ETFs. It's up to each individual. Then we come to long-term price targets. The long-term price targets are at least 27% to 37%. We do not yet know how strongly it will rise. But from today's price targets without the correction calculated, which we of course expect, it would be price increases of at least 50%, it would be 9,100 points, up to 100%, so 19,316 points. That's a lot. I hope I was able to help you with your investment and investment opportunities. I thank you for watching. See you next time.